Hello and welcome to another edition of the Forex Technical Market Update for August 2015. In front of us, we have the daily chart of the Japanese yen, and the Japanese yen is still in a consolidation mode. Prices found some support down by this weekly S1 pivot point at 123.61, and the market has bounced from that level and is currently up slightly on the morning. But the thing to watch with the Japanese yen is the stock market, because as I have been saying, if we see a strong sell-off in stocks and stocks break below its support area, and that is about 2040 in the S&P 500, we could see a strengthening yen. That has been the trend. Over the last couple of market sell-offs. Now, please note that is not a prediction, because ultimately the reaction of the market will depend on the market itself. So if you see that the USD Japanese yen is rallying in the face of a decline in stock market, then you would have to go with what the market is saying. Too often, folks do not listen to the reaction of the markets and do not listen and always say, but the market should do this. One thing I've learned in trading is that the market will do whatever it wants to do, and it's for you to pay attention to what the market is doing. So if we do get a sell-off in stocks, and let me just take a look at the S&P 500 here, this S&P 500 stock index. Support is down at this 2040 level. Let me just draw support. If the stock market breaks down, for example, and we see a rally in stock market starts to break down and we see a rally in USDJPY, what would you do? You would have to go with the trend. If you're trading USDJPY, go with the prevailing trend or the uptrend. Just because when stocks decline, the yen has rallied in the past, that does not mean it will definitely happen. What I do in the outlook is that I point out the historical trend, what happened in the past, and then use that as a basis for saying, okay, this could happen, but it does not necessarily have to happen. So just keep that in mind. So the Japanese yen is still in a consolidation pattern, and the market looks like to break out of this consolidation pattern, it has to close above 125.50 to the upside, and to the downside, you'd want to see the market close below 120. Definitely would signal that this market is heading to the downside. Looking at the Canadian dollar, the rally in the Canadian dollar resumed yesterday. The market was up yesterday and also seems to be up today as of this recording at this 131.50 region in the USD Canadian dollar. Taking a look, and with the USD Canadian dollar, we're still looking to see if the market closes above this 130.64 high. If it does, that would be very bearish for the Canadian dollar, and we could see a further sell-off in the Canadian dollar. The big mover of the morning, however, has been the euro. We see that the euro is up on the morning and is coming to challenge this 112 region. Now, where are the resistance levels? Resistance levels on the euro. We have a pivot point resistance at 112.50. So that could stall this rally. And notice the 112.50 is close enough to this swing high here. We have a swing high and we have the 112.50. The market is close enough to this swing high coming up, so we could see resistance at that point in the euro. But again, bigger picture, euro is still in a consolidation pattern. And when we have currencies in consolidation pattern, the market is likely to whipsaw up and down, up and down, up and down. It happens all the time. Taking a look at the British pound has desperately tried to break out of its resistance level. And if anyone ever doubted the importance of support and resistance, you can see it here. The market again attempted to break above its 157 high yesterday. The market tried, failed, tried again. We had another attempt again. The market failed. We had another attempt again. Market failed. So within the last 24 hours, we have had 3 attempts, and the market has failed on either of them. So clearly, this 157 level is very strong resistance in the British pound. And what you see here is a triangle, and the market is heading to the upward. The triangle base is heading to the upward side, and we normally do break above these levels. You have this ascending triangle here. The market, you have the triangle, and the market more often than not will break to the upside. Again, as I said earlier, that does not necessarily mean the market will break to the upside. I'm just saying more often than not, because the market can definitely head to the downside. And as a trader, you have to be prepared for that. Too often I find folks are emotionally attached to the direction of the markets. To make money in these markets, you have to not care essentially where the market goes. If the market is trending to the downside, then you should be on the short side of that market. If it's trending to the upside, guess what? You should be on the upside of that market. It shouldn't really matter exactly which direction the market is trending. So if the British pound decides to break out and trend up, we'll be long. If it doesn't, we will look for short opportunities. And that's really it in a nutshell. Another market that's rallying is the gold market, but this could be simply another retracement in the broader downtrend, because as you can see, this market, it's not downtrend over the last couple of years. If you want to, let's say this was B, then we have C, D, E. Any of you have been on the webinars, you are familiar with this labeling, E, F, G, H. So we have a series of lower highs and lower lows. So we have down move, retracement, down move, retracement, down move, a retracement here. There's a retracement to G, down to H. Where would it retrace the I and then head back down? So again, market is in a downtrend. The money to be made in gold is on the short side of this market over the last 4 years. Okay, if you would like to have these trading signals sent to your trading account automatically, what you can do is click on the link below this video to join our members area and to get started. For more information on it, just click on the link below this video. So this is Beyond, and I hope you have a wonderful day. Thank you.